Bitcoin and cryptocurrencies like Ethereum are super sensitive to monetary policy. So I think that September 17th is an important catalyst. Crypto typically does really well in the fourth quarter. So I think Bitcoin can easily get to 200,000 before year end. I know it's a big move. It's almost a double.
Tom Lee wastes no time making one of the boldest predictions of the year. For him, Bitcoin doubling by Christmas is not a wild dream. It's the logical outcome of how markets behave when monetary policy shifts in crypto's favor. His claim carries weight because Lee has a history of sticking to bold calls, many of which have played out. But to understand why he's so confident, we need to look beyond Bitcoin itself and examine the forces shaping the economy, particularly the Federal Reserve, bond markets, and investor sentiment. In Lee's eyes, all of these factors are aligning in Bitcoin's favor.
Well, we can see that Fed fund futures jumped from roughly 2.3 cuts by the end of this year to almost 3. So on the heels of that jobs report, the bond market essentially is saying that the labor market is now deviating further from the Fed's target than inflation and therefore justifying actually one additional cut.
Lee begins with the most powerful lever in modern finance, the Federal Reserve. Rate cuts, he explains, are no longer just speculation. They're being demanded by market conditions. When the bond market signals that the Fed is falling behind reality, it usually forces their hand. And as history has shown, Bitcoin thrives when rates fall, liquidity rises, and investors begin searching for assets that outperform in inflation-adjusted terms. Lee argues that with the labor market weakening faster than inflation, the Fed will soon have little choice but to cut more aggressively, setting up the perfect storm for crypto.
But on the other hand, I think mortgage rates could come down sharply because the spread between the 30-year mortgage and the 10-year is over 300 basis points. The 50-year average is around 160. So the Fed, if it begins to resume cutting and the bond market views that as essentially an easing trend, the 30-year mortgage could drop 150 basis points if the 10-year doesn't even move. That's a lot of easing for the housing market.
The connection may not be obvious at first. Why should mortgages matter for Bitcoin? But Lee's point is that easing in one corner of the economy ripples outward. If mortgage rates fall, consumer confidence strengthens, housing demand picks up, and investors see renewed growth. Risk assets flourish in that kind of environment. For Bitcoin, which Lee calls beta to equities, this means a magnified rally. Simply put, when traditional assets rise, Bitcoin tends to rise more. And if easing gives the economy room to breathe, the crypto market will inhale deeply.
Yeah, I'm going to take the camp that I think that these cuts are actually going to be very constructive for the economy because the 30-year mortgage is strangulating the economy. We know housing has slowed dramatically, but we also know that there's a lot of pent-up demand for housing. So it's a market that does need to be fixed in terms of easing sort of supply-demand conditions.
For Lee, this isn't just speculation, it's a roadmap. The Fed cuts rates, housing breathes easier, and demand spills into the broader economy. As business confidence improves, stocks rally, and when stocks rally, Bitcoin doesn't just keep pace, it accelerates. Crypto's sensitivity to liquidity means it acts like an amplifier of broader market conditions. This is why Lee insists that these cuts won't just save housing, they could ignite a chain reaction leading straight to Bitcoin's doubling.
One of the reasons Bitcoin stalled this year is the Fed's been on pause for 9 months. That pause all year, if you look at an easing cycle, that's only happened 2 other times, in 1998 and 2024, where the Fed began to resume cuts in the fourth quarter in September. Equities do really well. As you know, crypto is beta to equity. So I think it's going to be a very strong fourth quarter.
Here's the key historical parallel. Only twice before has the Fed held rates this long before cutting late in the year. Each time, markets surged, and crypto, though younger back then, showed its tendency to shadow equities. If history repeats, the coming quarter could be a textbook case of Bitcoin riding the tide of a broader risk-on rally. For Lee, it's not a matter of if, but when.
I would be more cautious, Andrew, if we didn't encounter so much skepticism about stocks. I think year to date, the S&P is up 10%. As you know, when you look at a pretty good measure like AAII, net bulls, less bears, it's been negative for 5 weeks. So at all-time highs, investors are bearish. And we find that skepticism among our institutional clients.
Ironically, what gives Lee more confidence is not unshakable optimism, it's skepticism itself. When investors are bearish at all-time highs, it suggests they've already priced in the risks. That leaves room for upside surprises. In other words, the wall of worry is fuel for the rally. For Bitcoin, which thrives on momentum and narrative shifts, that skepticism could be the launch pad.
So I think Bitcoin can easily get to 200,000 before year end. I know it's a big move. It's almost a double. But that's also going to be a
double
tailwind
from here. Let's just hold on. Let's just take a quick pause. A double from here. So everybody's listening to this. We're at $111,000, and you think by Christmas time, effectively, we could be at 200,000?
That's right.
Lee repeats the headline call because it's so bold it demands emphasis. At $111,000, doubling sounds outrageous. Yet to him, it's almost inevitable. He isn't hedging or couching his view in uncertainty. He's saying flatly that Bitcoin has room to surge, and that by the holidays, we could be looking at $200,000 Bitcoin as a reality, not a fantasy. We've heard Lee connect the dots between Fed policy, mortgage relief, business confidence, equity markets, and investor psychology. All roads leading to one dramatic conclusion: Bitcoin doubling before year's end. Whether or not you believe his forecast, there's no denying it captures the spirit of this market cycle. It's bold, it's controversial, and it reflects how closely Bitcoin's fate is tied to the broader economy. Lee's argument highlights something bigger than just Bitcoin's price. It shows how crypto has matured into an asset class that moves with global financial tides. When central banks act, when mortgages ease, when investors doubt stocks, Bitcoin doesn't just sit on the sidelines, it magnifies those shifts. His outlook reminds us that the next big move in crypto might not come from a technological breakthrough or a regulatory headline, but from the same forces shaping every corner of the economy. And whether Bitcoin actually hits $200,000 or falls short, Lee is essentially pointing to a world where digital assets are no longer niche. They are part of the main conversation in finance. That's the deeper takeaway here. Bitcoin's trajectory is no longer just about speculation. It's about policy, sentiment, and its role in the global marketplace.
So you are seriously bullish into the end of the year at this point, given these rate cuts. You don't look at it as bad news is good news, but therefore the good news can't be that good situation.
I would be more cautious, Andrew, if we didn't encounter so much skepticism about stocks.
Now it's time to hear from you. Do you think Tom Lee is right? Will Bitcoin really double in 2025? Or is this call just too ambitious for even the most optimistic bulls? And if Bitcoin does surge the way he predicts, what ripple effects do you think it will have on the wider economy and traditional markets? Share your thoughts down below.